My name is Mark Meza. As Peter introduced me, I'm from Austin, Texas. Our company is actually headquartered in Englewood, Colorado. And I used to work for a small British firm called IMS Research. Is everybody hearing me okay? And I work for IHS. Now let me go ahead and get started since we've got a late start. I'm going to be giving you a presentation on the state of the low voltage and medium voltage motor market. And as many of you know, there's a lot of regulations that affect the low voltage motor market. So let me go ahead and get started. Here's the company I work for here. The title of the presentation here. So I'm just going to jump right in. We're going to have a question and answer session at the end, and hopefully, Peter, you'll tell me to speed up if I'm going a little bit too slow. So let me start off here. We consider low voltage motors that operate at 690 volts or below. And my specialty is industrial motors. So this is just industrial motors, integral horsepower, not commercial motors. So the way we see the market is defined by 4 efficiency classes, IE1, IE2, IE3, IE4. And as many of you know, in Europe, you recently transitioned to the IE2 high efficiency motors. We also cover DC motors and other non-classified motors. And there's some new regulations coming out in North America and also Western Europe that are going to work to add a little bit more definition to what these regulations are requiring. And that's why I highlighted this section red, because in the next 2 years, this other non-classified section of low voltage motors is going to be affected most by these new regulations coming out in 2015. So let me go ahead and just give you a brief overview. Many of you may know or may not know, in the United States, we are on IE3 or premium efficiency called NEMA Premium. Europe is on IE2 as of the middle of 2011. China recently transitioned to IE2 at the end of September of 2012. So this is basically how we see the market, defined by efficiency classes. So this is how we see the market evolving over the next couple of years through 2018. As you can see, in 2014, we felt the low voltage motor market was worth approximately $17 billion. This is a global figure. You can see the timeline up above. I hope you can read the font, where we have in 2009 probably a 20% contraction in revenues, and that was due to the global recession. We had a nice bounce back in 2010. In 2011 and 2014, we had some troubles with economic troubles, the Eurozone crisis. China had a major slowdown in their low voltage market. In 2015 through 2018, we expect a lot of growth as these transitions to higher efficiency motors are occurring all over the world, mainly right now in China and Europe. So you can see, oops, sorry about this. I'll just hold this. So you can see the blue line represents revenue growth and the black line represents unit growth. Now what these regulations in effect are doing are requiring higher efficiency motors to be sold by law, which means they are more expensive. So the effect that we're having on the market is nominal unit growth, because the regulations don't stimulate demand for motors. They just require that higher, more efficiency motors or more expensive motors be sold. So you will see the light blue line, a nice growth pattern, and this is because of the more expensive motors that are requiring to be sold, which is good for manufacturers because they can make a lot more money. So standard unit growth, barring any bad economic things that are going to happen, much like the global recession. So we see steady growth, steady revenue growth through 2018 as these efficiency transitions are going on. So the way I like to define the market, and this is kind of what I've been talking about the regulations, we have organic revenue growth and inorganic revenue growth. Organic revenue growth is based purely on economic circumstances. When the economies are doing well, there's good demand for motors. The industrial sectors are doing well, buying motors. There's greenfield expansions that are buying new motors. We also have inorganic revenue growth, and this is a result of the efficiency regulations that are now in place. that are requiring more expensive motors to be sold. So that has a very positive effect on revenue growth. I hope that makes sense to you. Inorganic revenue growth, the regulations don't affect unit growth at all, only the revenues. Normally, over any period in time in the motor industry, we see a 2 to 3% increase in the average selling price of a motor. This is due to increase in raw materials prices, copper, iron, steel, all the major raw materials that go into motors. This is widely considered, the last 20 years is widely considered the most exciting time in the motors market because we're expecting a 5 to 6% growth in average selling price of motors due to these regulations. So a very simple analogy that I like to use, before the regulations, we would buy a $100 motor. Now the regulations are saying you need to buy a higher efficiency motor that costs $200. So it doesn't affect unit growth, but the price of the motor is going up. And this is, the regulations are causing this nice growth in revenues for manufacturers. So here's a timeline of all the major transitions going on in the world through 1997. And you can see in 2015 and 2017, as many of you may know, there's going to be another transition to IE2 in 2015 for 7.5 kV power rating above, which is basically 10 horsepower and above, are required to go to an IE3 level of efficiency. Now in Europe, you have two options. You can buy an IE2 motor plus a variable speed drive to achieve this, or you can buy an IE3 motor. So this will begin in 2015 for 10 horsepower or 7 kV and above. In 2017, it'll be 7 kV and below, so 10 horsepower and below. China recently transitioned, as I mentioned, in late 2012. Brazil in 2009 switched to IE2. North America switched to NEMA Premium or IE3 on December 19, 2010. And you can see Turkey recently switched to IE2 in the middle of 2012, I believe. So we have all these transitions going on in all three major regions. Two key concerns about all these transitions is there adequate enforcement of the regulations? Who is making sure that these motors are being sold in accordance with the laws and the regulations that are coming out? So these are some concerns that are coming out about, you know, how quickly are these transitions happening if there's no enforcement or oversight on the motors that are being sold. And I'll get into that a little bit more. And we also have, anytime you make regulations for any industry, there's always cracks that things slip through. And I like to call these loopholes. They're unintentional, but they exist. And I'll go into a little bit more detail about what these loopholes are doing or what they are. And these loopholes are causing a slowing effect on the transition rate. And I'll get into that a little bit more in the coming slides. Here is by revenue and share of the low voltage motor at the global level by efficiency class. In 2013, the majority of the world was still on an IE1 motor class, and this was worth almost $7 billion worldwide. Most of this IE1 would be in China, as China has just recently transitioned. China is such a huge market. Recently, as I mentioned, Europe, Western Union used to be IE1. Now we're switching to IE2 here. That market is worth about $3.5 billion, or about 23% of revenues. And the IE3 market, which is mainly concentrated in North America and Canada, almost equivalent in revenue value and share value to the IE2. Now we have a very small market segment called IE4, very small, 1.4% right now. But this market segment is creating a lot of buzz right now, even though it is very small. There's a lot of new technologies coming out. I'm going to get to that in the coming slides. We also have DC horsepower motors. Integral horsepower DC motors in the industrial realm have been on the decline for over a decade. Right now, we estimate about 1.4% is integral horsepower DC. We expect that to continue to go down. The reason that DC is going down is because the ongoing transition to AC induction motors. So there was a lot of DC installed base in the world, eventually going to AC induction motors. And then we have the other category, which is basically all of the motors that do not have to abide by the efficiency regulations. And there's all kinds like submersible pump motors, fire pump motors, all kinds of specialized custom motors, definite and specialized purpose motors, if you will, that do not have to abide by the regulations. This is the category on the previous slide that I highlighted red, where we're going to see the most effect with the new regulations coming out in 2015. So it usually takes 3 to 6 years before a transition really starts going in full effect. I like to say maybe 3 to 6 years before 50% of the installed base in any region is transitioned to that next higher efficiency level. Now, we used to think as soon as a law came out, within 1 year, the market flips over and we ball by IE2 motors in Europe. It's not happening that way. It's happening very, very, very slowly. I would estimate right now in Europe, maybe 45% of what manufacturers sell are IE2 motors right now. There's still a lot of IE1 motors being sold in Europe, even though the regulations have been in place for over 2 years. But there are a lot of exemptions and what I call loopholes that are being taken advantage of. This works to slow the transition. As I mentioned, there's regulations coming out to close these regulatory loopholes that are going to include more motor types, affecting the others category. As I mentioned, the DC motor market is on the rapid decline. IE1 will decline in China and Western Europe and Japan as these countries are transitioning to IE2 and IE3 respectively. Japan in 2015 goes to IE3. IE1 will not go away, it will just be greatly diminished. But IE1 will still be a viable growth market in all countries that don't have energy efficiency regulations. Malaysia, Indonesia, a lot of Asian countries, some South American countries, but mainly the established economies of the world. The governments have set up these regulations to transition to higher efficiency motors. So basically, the IE1 market will shrink quite a bit over the next couple of years, but it will still grow slowly in these countries I mentioned that don't have these energy efficiency regulations. One interesting note about the IE4 market, a lot of end equipment manufacturers are throwing their hat into this ring and either procuring or making their own IE4 motor. Some examples are Danfoss, Flowserve, KSB. Pump makers are getting pump and fan makers getting very interested in IE4 motors because of the high efficiency that they offer. So here is a breakdown by geographic region. You can see China by itself is almost 20% of the global market in terms of revenues. And their units are almost double of what they are in Europe and the United States. You add China and rest of Asia together, and clearly Asia Pacific is the largest market for low voltage motors out of the 3 regions. Again, EMEA and the Americas are almost equal, 32 and 33% by revenues. And here again, what I was explaining earlier, the revenue growth, the compound annual growth rate from 2009 to 2018, we see here at the world levels 10%. And we can see here where the most expensive motors are being sold right now. And those are NEMA premium motors in the Americas, where we expect almost a 13% compound annual growth rate through 2018. China, 8%, Europe, Middle East, and Africa at 9.1%. And I also might mention, in the Middle East and Africa, there are no energy efficiency regulations. So plenty of IE1 motors are still being sold into these countries. And as you know, oil and gas and mining is very big sectors in these countries in Middle East and Africa. So we're still using low efficiency motors quite a bit all over the world. Here's how we see the market developing through 2018. You can see IE1 shrinks quite a bit from 44 to 26% in terms of revenues. IE2 is on a nice growth pattern through to 31% by 2018. IE3, mainly concentrated in North America and Canada, grows to 32%. Now by 2018, Europe will have been in the first year into the transition for 7.5 kV power rating and below. So maybe by 2020, 2021, that IE3 growth might be 34, 35%. Now, whether Europe goes for the IE2 plus a variable speed drive option or the IE3 option, this is something that I'm following closely, and I ask a lot of people for their opinion because everybody has an opinion on which way the market is going to go, and I have my own opinions as well. You can see the DC market is reduced to about 3% worldwide, 0.3% worldwide. And this, we don't think the DC market will ever go away completely. We believe this market will become like a niche market for legacy replacement DC motors that are continuing the install base. A lot of motors in the mill segment, like paper mills and steel rolling mills, and some mining applications, traditionally have a lot of DC motors, and they still do today. So we don't see DC ever going away, and I need to make a clear distinction here. When I'm talking about DC motors declining, I'm talking about integral horsepower DC motors. Fractional horsepower DC motor market is doing just fine. It's the integral horsepower DC motor market that's being displaced by AC induction machines. So we see the IE4 market growing from 1.4% to 3% by 2018. These are very expensive motors. I'll get into this a little bit more in the coming slides. But we expect almost a $10 billion growth in revenues through 2018 from 2013, barring another economic downturn. So we hope everything goes smoothly for, forever, of course, but for the next couple of years, we hope there's no Eurozone crisis or banking crisis in America that hurts these industrial sectors like what happened in 2009. So here we have, again, a different way to look at the market. The discrete industry, which is basically machine builders and OEMs, constitute almost 70% of the low voltage motors sold globally. So machine builders have a huge influence on the way this market grows. Worth over $10 billion in 2013. Then we have the process market, which is mainly the end user market. The end user market is worth about 27% or $4.2 billion, and we have the other category, which is just under $1 billion. The other category we consider to be infrastructure and building automation. So we have the low voltage motor market split in three different segments: discrete, process, and other. And also by frame size. Most of the world right now is IEC. Europe is IEC, Asia Pacific is IEC, most of South America is IEC. This market, 73% by revenues, over $11 billion. The NEMA market, which is mostly concentrated in North America and Canada, is worth $4.2 billion or 27% by revenues. Now there are some NEMA frames being sold all over the world, but it's very, very insignificant against the big picture. IEC clearly is the dominant frame type being sold in the world today. Most IE4 motors are sold into the process sector or the end user sector. End users are very, very concerned with energy efficiency simply for the reason because they pay the electricity bills. They are very concerned with saving money on electricity usage. If you have an installed base motor, let's say a 10 horsepower motor, you might end up, the initial purchase cost in the lifetime of that motor is 3%. The big expense of that motor is the electricity cost. Over the lifetime of the motor, the electricity costs are 97% of the cost for running that motor. So you might buy a motor for $2,000, but every year someone writes a check for maybe $5,000 or $6,000 for electricity bills to run that motor. So even a 1% efficiency gain in a motor means millions of dollars of savings in electricity. So you can see why people are interested in exploring a high efficiency motor option for whatever application they're using. So the big question is, will Western Europe choose IE2 plus a variable speed drive or IE3 in 2015 and 2017? That's a big question coming up that we're going to find out the answers for in the next 1 or 2 years. One interesting thing I found was that there's a thriving IEC market in NEMA-centric North America, which I found very useful because anywhere in Europe or Asia Pacific, you will not find a thriving NEMA frame market. But what I found out is a lot of, especially in the oil and gas industry, a lot of machinery is made to metric standards coming from Europe or Asia using IEC motors. And those machines get installed in America, and there's a replacement market for IEC machines in America, and that's why we say there's a thriving IEC market in America. A lot of American manufacturers have either started an IEC product line or extended their IEC product line to address this growing IEC market in NEMA-centric North America. So as I was saying, the discrete sector or machine builder has a very heavy influence due to the high volumes of motors that they buy. Process are assumed to be the quickest adopter of high efficiency motors, yet they are the most vulnerable sectors during economic downturns. One thing I'm particularly interested in is the IE4 market. It's 1.4% of the market right now, but many of you may or may not know China has basically controlled the rare earth mineral market. They have for quite some time, and we don't see that changing. Most of the neodymium and dysprosium that is used for these high-powered magnets, for these IE4 machines, is processed in China. So it's not that the rare earth minerals are only available in Chinese soil, they're available all over the world. The ability to process them into magnets is right now, China has a very strong grip on that. Some other motor types, let me back up just a little bit. The market reality for China basically putting a stranglehold on this rare earth mineral market is that other and new IE4 technologies are emerging, which I think is a good thing for the market. And I've listed a few here, some of the ones that are out on the market right now. Motor types that achieve IE4, ones with no magnets and ones with magnets. No magnets, ABB recently released their synchronous reluctance machine. Synchronous reluctance technology is not new. It's been around for quite some time. But these technologies are getting a new look because of the high price of neodymium magnets. We also have switched reluctance machines, IE4 efficiency machines. Nidec this is their bread and butter, switched and reluctance. Switched reluctance, again, is not a new technology. It's been around for a while, but companies are looking at these technologies that have been around in contrast to what China is doing with their rare earth mineral markets. Recently, China capped their exports, and the prices of neodymium magnets skyrocketed in late 2011. They've stabilized a little bit now, but still very expensive in contrast to traditional ferrite magnet technology. IE4 motors that have magnets, neodymium and samarium cobalt-based permanent magnets. We have an ECPM, which is basically a DC brushless machine using ferrite magnets. Very interesting company in America called Novatorque, and their specialty is this DC brushless machine that achieves IE4 level of efficiency with traditional ferrite magnet technology. Hitachi Metals has come out with an amorphous metal plus ferrite magnet technology, also that achieves IE4 levels of efficiency. We've had copper rotors for a long time. You could consider copper rotors the original IE4 motor if you want, before there were motor efficiency classifications, but copper rotor motors are very expensive. We won't ever see mass-produced copper rotor motors because of the high price of copper, obviously. But you know, we've got several different flavors of IE4 right now on the market, and we're bound to see some new ferrite technologies come out over the next 5 or 6 years. So this IE4 market is creating a lot of excitement in the market right now, even though it's very small. I'm going to skip this. I already talked about the high REM prices. Some trends you can see here by industry sector where these IE4 motors are going into. And like I said, the process sector is very concerned with energy efficiency. And this is where you're going to see the quickest adoption of IE4 and higher efficiency motors. You can see the breakdown by application. Most of your high efficiency motors are going to go into applications with S1 or continuous duty cycle motors, pumps, fans, compressors, things that run maybe 20 hours a day. This is where you're going to see the most return on the investment for buying a high efficiency motor. So as I was saying, some end equipment manufacturers, pump and fan manufacturers producing their own IE4 motors. We have some OEMs such as Nord and Bauer Gear Motors with gearboxes producing their own high efficiency IE4 motors. So there's a lot of excitement in this very small market right now, and we feel it's poised for very strong growth. Some other different variations of IE4 products. Italian company Laferte has right now an integrated permanent magnet motor, which means the variable speed drive is piggybacked on top of the motor. ATB has recently come out with a motor similar to Laferte's. So you can see there's just a lot of exciting things happening in the IE4 market right now. Some sector performance in 2013, after years of strong growth. The global mining sector had a huge downturn in 2013 due to lack of investment funding. Am I doing okay, Peter? Yeah, okay. Some outperforming sectors last year were oil and liquid natural gas, mainly due to the fracking or the shale gas renaissance in North America due to fracking technologies. When the oil and gas sector is doing well, usually the chemicals and petroleum industry is also doing well. Many chemical or petroleum byproducts coming from the oil and gas to make plastics and all kinds of other products. So the chemicals and petroleum industry doing very well right now. Shipbuilding industry there's been a lot of consolidation in the Chinese shipbuilding industry, and the shipbuilding industry had some very hard years. But they had a good year just for liquid natural gas carriers and specialized vessels. Basically, those were the only types of ships being built in the last 2 years to deal with the oil gas boom in North America. Some underperforming sectors right now globally, rubber and plastic, cement, pulp and paper. There's been a lot of consolidation in the cement and pulp and paper industry over the last couple of years, but we do feel that after some rough years that those industries are going to start growing nicely again. Most of the pulp and paper industry now is moving to South America, with a lot of European countries investing in these South American pulp and paper companies. Printing and woodworking also not doing so well right now. Some top sectors, commercial HVAC, food, beverage, and tobacco and mining, I would consider one of the most stable sectors. If these sectors are doing very bad, that pretty much means the entire global economy is experiencing some rough times. Utilities account for about 5%, and other sectors combined account for about 43%. Top application sectors, to no surprise, most low voltage motors go into pumps, fans, and compressors. Others, about 21%. So here's some estimated world market shares for 2013. ABB is now number one in the world with their acquisition of Baldor 2 years ago at 14%. Second is Siemens at 9.5%. Antico, Taiwanese company, 3%. American Regal Beloit, which also has a good presence in Asia and some in Europe, and in China as well at 2.5%. France's Leroy Summer at 2.5%. We've got a Chinese player, Shandong Huali, mainly concentrated in China, but still has 1.5% of the global market. Hyundai Heavy Industries and Hyosung, two Korean companies, and Nidec, which just recently purchased U.S. Emerson, and I believe about a year and a half ago they purchased Ansaldo Sistemi, which is a big medium voltage motor maker. Some 1% or less market share players you have here on the right. There may be some surprises. Again, we have a lot of Chinese manufacturers that have at least 1% of the global market, even though they only sell their motors in China. So that gives you an indication of how big and what a major influence China has on this market. Some recent market activity. Yeah, 1 minute, okay. I'll just go through this very quickly, and maybe you can read faster than I can talk since I'm running out of time here. But just basically some points that I've gone over, some major acquisitions that are happening. This is what we're going to be expecting over the next couple of years and our forecast for Japan and Western Europe. Systems efficiency regulations, I need to point that out, are coming, and there being legislation being discussed right now. Basically, a pump system. The motor has to be efficient, the pump has to be efficient, the drive has to be efficient. They're going to look at the net efficiency of the entire system. So this regulation is also coming into effect in the next 2 years in North America and Europe. We used to only look at the motor or the drive or the motor and the drive. Now the entire system is being looked at. So after 2017, when Western Europe transitioned to IE3 or IE2 plus variable speed drive, we don't have any more planned transitions going on in the world. Some China news, again, I'll let you just read through this because you can read it faster than I can talk it to you. And also the state of the DC market, DC motor market, which I've explained is on the decline. So about 30 seconds, or yeah. Well, I didn't get to our medium voltage. I can flip through this very quickly. Yeah. Okay. Should I keep going? Okay. Finish. Okay. That's all the time I have, and I'm sorry I was a little bit late. I hope you found this informative. Again, I would love to talk about these things with you. If any of you have any questions for me, I have my business card. Please feel free to email me or call me if you have any questions about medium voltage, what I didn't get to today, or the low voltage motor market. I'd be happy to talk about that with you.